Okay, so this is the bar by bar replay of the trade for the 19th of December. Just to recap a few things that we wanted to achieve and our mindset going into the market yesterday. So first was that obviously the bar that were getting printed on a 5 minute basis, as we had seen yesterday, were significantly large bars and therefore were not giving good risk to reward for our trades, and then each trade, if it went on the loss, had the potential to wipe off quite a lot of gains. So one thing that I had decided to do as we went into the market was to open and see initially the patterns on the 3 minute chart, hoping that I will get a slightly better risk to reward. So that was one. Second, as we traded yesterday, we saw that the majority of mistakes were not happening because of the pattern, but because I was missing out on executing on some rules here and there. So I just added some text onto a chart just to continue to remind me of what are the patterns to be traded and a few things to be kept in mind, which is the top right box that we see now. And we'll continue to expand on it as we revise and refine our rules. The next thing that I did was that I decided now that as we scale into execution, we'll try a more risk-based approach. So that's the other table that I added to the indicator, which takes into account how much I'm willing to risk, what is the risk per trade that is getting printed on the chart, and then based on that, how many lots we are permitted to do. Some of that is also flexible because eventually I also wanted to trade and get some execution behind it. So even if it will show zero lots permitted, I still traded about a few as we went into it. And the last bit was as we were discussing the concept on mitigated highs and mitigated lows, and the lows and highs that get respected and where good signals are getting printed. I added some code modification, so now those levels are automatically printed. And the final thing that we had decided while going in was that looking back at the history of trades that have happened, what I've realized is that the afternoon session, which is somewhere around let's say 11:30 to 12 midnight my time to about 2:30 to 3 a.m. That is where I am experiencing most choppiness and I am not able to take the right trades. So I had decided that I will not place any trade somewhere around 12 to 2, and I'll just continue to observe the market at that time. And as I gain more experience and understand how to better discern high quality versus low quality setup, I will continue to trade. So multiple execution level principles were on my mind as we went into the market. So uh, let's now play out how the day went. So the market opened um, with a gap up, and it started kind of printing some of these. So like I said, so now the relevant lows and highs to be taken are getting printed automatically. The solid green line is the unmitigated high. It's the highest high beyond which there is no close of a bullish bar. And the dotted line is the mitigated high. It's the highest high beyond which there is a close of a bullish bar, and similar logic for the red lines as well. At this point, the first signal was printed. So just to go over some of the details, so it's a weak signal because it's a gray X, It has a weak sweep because it is a yellow diamond. So if I look at my rules and I look at the third rule, so if I'm trying to trade a reversal with a weak signal and a weak sweep, then what I need to have is definitely a 50% close below the mitigated high line of the bar which creates the mitigated high low, right? Um, so if I look at this one, uh, so currently after this bar was printed, my 50% rule was not satisfied. So I continued, and at this point, um, the rule was satisfied. The other key thing, and we will continue to observe this as we go along, is that as I was reading some of the literature around this, which in smart money concept is typically quasi rejection block. The way that good signals are defined is when the bar that is created, this swing, which is in this case, needs to have the extreme open or close or whatever above this bar and above this bar. So even in a minor way, this bar did have that, right? And I did observe it through the day, and actually this holds up pretty well. At least it held yesterday, where high quality signals with when we don't have a when we don't have a strong reversal, actually these kind of patterns uh, signal high quality ones, but any which ways. So at this point in time, we continued, and I had my entry. Once this candle got printed, which had the close below the 50% level, I had placed my entry somewhere around here. So this was my first expected short entry. uh, I got filled, and then the market continued. So when I had the fill, I needed to figure out the right target level. So like we are trying to do, from the relevant low, we placed the anchored VWAP, and our expectation was that we will continue to take the profits at this level, expecting some amount of rejection at this level. But I also wanted to ensure that I start training for better trailing instead of just taking profits off, which is the whole reason why the lots have been adjusted from a per risk basis, so that I'm not over leveraged, and I have the capacity to take the losses in favor of trying to hold the trades through the trend. So when some of these bars were getting printed, the way that I was experimenting with the trail was I was keeping my stop losses at 50% of these wicks. So no scientific reason, but I'm experimenting with some methods that continue to keep me in trade, but also provide logical points from perspective of trails. So when this bar got printed, I had my stop loss moved here, and once this got printed, yeah. So one of the things that happened was, just to correct myself from what happened, I actually had a sell order here, or rather a cover order here, but for some reason this bar did not fill my order, which is another concern as we increase our lot size if we get bad fills. But any which way, so when this bar had printed, which was a big bearish bar, and it did come to the target that I was trying to take, and it did not happen, I think that is when I did move my stop loss to this level, thinking that yeah, if the market moves down, then probably I will get a good trend. And then this got printed, which gave me the opportunity to do the same thing here, right? Sorry, so I was not remembering correct when I was saying the stop loss placement here. I actually was trying to be disciplined and take the trade exactly at the target, but for some reason it did not get fill. And when it did not get fill, I was trying to trail it at this level, and then yeah, yeah, and got my fill somewhere around here. I think around, yeah, around this number. So it was a proper entry, I would say, because I waited for all the rules to be filled. The exit was also planned in a proper way. It's just that it did not trigger, and then we had an exit from a trail perspective. So this was probably from an execution perspective an okay trade. Also was profitable, but uh, yeah, we'll continue to see how this behaves. Okay, so now after this point, the idea is that now let's say a new low for the day has been printed. We'll try and take a trade on the long side from this point in time. And for all practical purposes, this is a strong signal. This also is a strong sweep because both the indicators are in green. And I did take the trade on the upside. Now, when this bar got printed, and obviously it kind of came to this level as well, I was trying to very actively manage my stop loss, which probably was the incorrect way of managing the trade. But somehow my psychology was just to make every trade profitable, which is the worst way to trade, and which is why I was then second guessing myself and trying to even take small scalps rather than waiting for the trade to unfold and either take my target or take my stop loss. So at this point in time, if I look at where I was placing my anchored VWAP, which is the highest high of the day, yeah, so the way that this trade I was trying to do, or the way the trade should have unfolded from a theoretical perspective is that our target should have been here, and then we just wait. But again, like I said, I was trying to actively manage and keep still the trades in profit, and then when this bar got printed, so my entry was somewhere around here, yeah, and actually my exit during when this bar was printed was a very small scalp entry, somewhere a small scalp exit, and somewhere around here. And then probably at this point I was feeling that maybe I did the right thing because the market kind of came back sharply. But then yeah, that was not the right way to trade. That's the only point. Now when both of these trades had been taken and the market had somewhat settled, what I decided to do was to then move to the original time frame of the 5 minute chart. Yeah. So then now if you see that now it is also 11:30, so I paused the trading, deciding that I will now just watch the market and see how it behaves rather than trying to take trades, because like I said, like this is the congestion period. So at this point some signal got printed, Just to go over some of the new observations that we are seeing for later. So this is a weak signal with a strong sweep, which we should be looking from an entry perspective. It also has, it actually does not have a fair value gap, so probably not a good entry, because that's the other thing that we definitely want to see. And in this whole thing, if I look at it, yeah, maybe technically this bar should not be taken because inside bar, but even if I take this bar, so there is no inside bar, or even the FVG, where because the lows and the highs are overlapping. So probably this is a poor entry, which probably was true. And then a new signal got printed again. Like, I was not trading because I was on a pause, but just to go over what this is showing. Again, there is a signal, weak signal with a strong sweep, so that's good. If I look at the drive, then there's actually a fair value gap, so the second condition is also fulfilled. And if I look at this bar which created the lowest low, it actually went below this the extreme of this bar from a body perspective. And when the next candle got printed, let's leave this because it's an inside bar. When the next candle got printed, its body is also away from this, right? So this pattern actually was a good pattern, as we are observing. And the way that it should have been traded is to go long above this for again target of this particular one. And also it was the time to move the anchored VWAP to the day perspective, because the candle that has printed the lowest low for the day, there has been a close above that, right? So the low is in a way confirmed. So this is where we would move our anchored VWAP, and this would have been like a good trade because then it reached our target pretty swiftly. Also, I don't think there would have been a problem with the fill because it also closed above this, right? So again, um, things to observe as we move along. Not trading, not trading, not trading at this point in time, and also no signal. So now the signals that we will any which ways be taking as we get more adept at trading in the midday is still the reversals from the established day high day lows or continuations beyond it. So none of the internal signals are of any use to us. Now a new signal get printed. Yeah. So now when this particular uh, trend or sorry signal got printed, there was an opportunity for us to move the anchored VWAP because the candle that has the lowest low, there is a close beyond that high. Um, Now it's a strong signal with a weak sweep, but because it's a strong signal, it qualifies for us. And the bar rule or the open rule, we are applying only for the weak signal, right? So just to, if you look at the first rule, that we take the reversals when there is a strong signal, either there is a strong or weak sweep and an FVG. So in this drive, there are definitely so this bar is where an FVG has been created. So that condition is fulfilled. It's a strong signal, so that condition is fulfilled, even though it's a weak sweep, which we don't care about. So this was the entry, and I decided that because it's past 1:30, then probably we should take this trade. And the other thing that was playing on my mind was that this was a long wick. We need to figure out a way to codify what's a long wick or not, but at least visibly it is there. As we move along, we'll try and define if it's a long sweep or not, sorry, long wick or not. Then I got my fill. This was a pretty bad candle to get the fill because it was kind of coming down a bit. Uh, yeah, and then I think I was planning at this point in time. I was planning to keep my stop loss at this level, and then when some of this got printed, I think my uh, tendency to keep the trade still profitable, I exited somewhere around here and did not wait for it to show its true strength or something, and then that probably was the bad way to trade. If we continue to as we continue to observe the way that the open behaves, then if you look at this one, this is a better signal than this one, right? Because the candle that actually went for that long low wick, the body actually pushed beyond this, and when this signal got created, there was a confirmation like that. So in ideal cases, or as we refine our methodology, probably the right long to be taken would be this and not this. But any which way, like, this trade in reality kind of gave me a minor scalp, and was okay. But we should have we should try and figure out if this is the right pattern to take the trade off from. In this case, we would still be waiting for an entry. Then we would have gotten our entry at this point, and then the market continued and reached our would have reached our target, right? So that's again some interesting observation that is coming along on how the open is behaving. Um, and um, I don't want to move the confirmation to this candle, because what I'm also realizing is that even when the candle is forming, actually there is high predictability on the way that the candle is forming, if we will get this or not. Because if, let's say, this low is printed, or this body is printed and we are seeing, so what typically happens is that if there is sweep to be taken, and the sweep essentially happens in the earlier part of the bar, it kind of comes and sweeps, and then it continues to trade. So we can see if the rule of open is there, and actually, rather than waiting for this, we can continue to refine our entries as we go along. But again, all of that is for the future. And the best way to have traded would have been to wait to for this high or this entry to be taken, and then wait for the signal and place a stop loss somewhere around here, right? So that could have been the trade. We'll see in the future. After this point in time, yeah, I mean, again, like it always happens, the trade we exit early or don't take essentially end up doing pretty well. uh, and then it kind of came down. We From our system perspective, we had no trade in this area because it's not coming off of day high, which is this green line. It is not coming off the day low, and it's not a continuation, so we are not trying to trade internal structures. And yeah, at this point in time, while a wick has been printed, but from our system perspective, there is no, I would say, there is no reversal signal, so it's of no use to us. Any which ways, this would have been a failed trade, but yeah. And then market just continues to do this. Now, so one key thing to note here is that, let's say we are trying to take the reversal uh, below somewhere this level, right? So let's say we are here, right? So at this point in time, our mitigated low is this, and unmitigated low is this one. The way that we have decided to have a confirmation is only when a candle is completely printed, like both high and low would be below this, right? Till that point in time, we will not consider it to be a the right continuation. So let's say this is the signal, this is the last signal, the last low, so this unmitigated high. So the way that we want is that a candle to be printed completely here. Obviously, when this candle will get printed, the system, the code will paint the low somewhere else. So we'll keep a track manually. This is where it happened, right? Where for us to take the continuation, a full candle is printed, but this is again like just very close to the end of the day, so we will not take this trade. Other important point to note, just from a discerning of low quality to high quality signals, is that this particular signal, when it got printed, let's take time to hear. Okay, so there were multiple things that were going on for this candle. Yeah, so there was multiple things that were going on for this candle. One, it had come in and created the candle body reversal as well, right? So this candle body came till here, this candle body became below this, and this candle body is above this, right? So this signal is turning out to be a good quality one. Second, this was almost an equal low. So this is like a dip from the same level. And those signals typically behave much better, as I've seen, like once this zone is created of the unmitigated lows and mitigated lows, if there is another reversal from this one, which is that whatever orders were here, they have been taken out, and then there actually has been a dip below it, and all of that jazz, then those signals actually behave much better. So as we continue to trade, we'll continue to see if we can identify these better quality signals in the live market. I wasn't, but we'll continue to open an eye for them, and then we'll see how that market behaves. So in summary, the execution, I would say, was much better. I need a slightly more systematic method to define the trail approach. And third, we need to now become more mindful of the some of the other refined nuances of what is a high quality signal versus a low quality signal. So the trades were in profit, so that actually is good, but I am slightly happier about the execution that I showed versus not. However, there was a time when one of my trades were choppy. It was in profit one time and in loss another second. Then actually I did place an order with an oversized quantity from a reversal perspective, that if the market reverses comes to my stop loss, then I will take much bigger quantity than was allowed from a risk perspective, so that I can then cover that. Thankfully I canceled that order at after some time, but the panic still continues. Need to figure out how best to navigate some of that. So as we go along, we'll see. Okay, thank you.